our parents immigrated from India, not just my parents, but like my entire family. Their whole goal was survival, and they've obviously met that goal. Right now, I feel like as the next generation, our goal is to thrive. So when I think of success, it's not an individual thing for me. It's a family, it's a community, it's our village, right? So it's not just our community, but overall. So whatever I feel like I learn, if I can pass that on to clients or if I can pass that to other individuals, I feel like that to me would be worth it, right? That to me would be success.
Your network is your net worth. Come listen to some of the most successful people I know share invaluable knowledge, stories, and advice in real estate, business, and beyond. This is Weiss Advice. Whether you want to take your business or personal life to the next level, look no further. Welcome back to another episode of Weiss Advice. I am so excited to be here today. That's me, Yoda Weiss, your host on this journey I like to call a podcast. And with me, we got Sameer Sharma. Really excited to have you on the show, Sameer, because it's not often we have tax professionals. We talk to a lot of real estate investors, but the great thing is that you're also a real estate investor. So, I think you have a lot of knowledge and value to add on the subject of kind of tax mitigation, as well as, real estate investing, how those two tie together. So great to have you on the show. How are you doing today?
Good, Yona. Thank you for having me on. I'm really honored. And I'm glad you took a chance to, contact me, have me hop onto the podcast. So as you can tell, I'm a little nervous, but hey, we'll get the job done.
No reason to be nervous here, Sameer. No one bites across the Zoom screen. But what's amazing is, like I said in the introduction there, you are a real estate investor. You are a tax professional, which means you guys have an accounting firm that helps people with their taxes. So tell me a little bit about how you got started with the tax side of things, and then we'll roll into the real estate thing, because I believe that came first, right? Which came first, the tax or the real estate?
The tax part.
Okay,
yeah, the tax part. The tax, definitely. So I've been doing this for about 18 years. I started helping my dad. He started doing some tax work on the side out of our, family living room. And once the second I turned about 17, 18, I started helping him out. Literally the second I turned 18, he got me licensed and helping him punch in data or data entry, I guess, to get started. He saw me chatting on America Online. I don't know if you remember AIM. And he's like, you can type pretty fast. He's like, you can type pretty fast. So I was like, yeah, I can get there pretty quick with the typing. So I was like, hey, how about you type in this document for me? So it kind of started off with that, typing out letterheads, typing out documents. And he's like, well, you can type pretty fast. And then from one thing led to another, got me licensed, doing income tax, accounting, tax planning, tax preparations. This was my 18th season. So yeah, that's how I kind of got started with that.
That's pretty cool. And obviously at a certain point you went and got a degree and got licensed and all that kind of stuff. So you have the background in that. Mm-hmm. And if I'm not mistaken, you are an enrolled agent, correct?
Correct.
So tell me, or our listeners, a little bit, what's the difference between, you may have seen this before, EA, enrolled agent, as opposed to a CPA, certified public accountant. What's the difference between those two?
Yeah, they're both really good designations. What the CPA can do that enrolled agents can't really do is more of like sign off on financial statements, right? So for example, like I can do books all day, every day, but I just can't attest them or, sign off saying that this was a CPA audited financial statement. With an enrolled agent, we're more tax experts in terms of we get our licensing directly from the IRS. We can work in all 50 states, so there's no limitations there. But yeah, so like, for example, with me, I dabble a little bit with the bookkeeping side, help clients clean up their books, get them all ready to go for tax season. But our bread and butter is taxation, where we can also help clients. We can also help represent clients in front of the IRS. So with those pesky notices, CP 2000 notices and whatnot, audits and stuff like that, we can help them represent clients in front of the IRS. So clients don't have to, face the vulture. I don't know if you noticed the IRS's logo is actually a vulture. So you want to be a little careful about that.
Oh my goodness. I never noticed that, but that makes so much sense. Oh man, that's going to be, I'm never going to be able to not notice that now. So at a certain point, you and I guess some of your family members, got involved in real estate investing as well. Did that come about through having clients that were investing in real estate?
Yeah. Absolutely. So the cool thing with what we do is we get to see, from an investment standpoint, we get to see what works, and we also get to see what doesn't work, right? In terms of, stock investments, real estate investments or whatnot. So we kind of, copycat some of the clients that were really doing really well with the real estate side. So me and my cousin, Sonny, we decided to, form a company and, each put in some money and say, hey, let's go ahead and try this out. So one thing led to another. We started off with one townhome, and today we're at about 45 units. So not a huge portfolio, but gets the job done,
Yeah, absolutely. And you're investing in some commercial properties as well, or it's just simply the residential?
Couple commercial, and then the rest of them are multifamily.
Gotcha. Okay. I mean, that's important. So talk to us about, and we hear this all the time, and I see posted online all the time, one of the greatest things about real estate investing is the tax benefits that are involved.
Mm-hmm.
Now, obviously, I know about some of that, but
Right.
Tell us, what are some of those tax benefits that everyone's talking about, and how do you deal with that?
So that's the $1 million question, right? Like, we get a lot of clients saying that, hey, I want to buy an investment property because my friends saved hundreds of thousands of dollars on their taxes. Well, the answer is always depends, right? It always depends. It's a yes and no question. It depends on multiple circumstances, but kind of like where you kind of come into play, where how I came across you, where through our, tax planning course, one of the tax strategies was cost segregation. And, I was on a Facebook forum where, it's like, hey, does anyone do cost segregation? And I literally got 30 messages saying, Yona Weiss, cost seg king, contact this guy. And so I did. So that's kind of one area. But all in all, I guess from a tax savings perspective, one thing that people can think about is depending on your expenditure, you may or may not end up paying taxes on the rental income. Now, if your rental income is more than your expenses, that's good. That's a good investment. But then, Uncle Sam kind of comes in and takes a piece. So there are ways of, accelerating depreciation through cost segregation, or, owning the property through an entity, which may or may not have favorable tax consequences. Ultimately, everything boils down to your personal taxes. Again, if you own the property individually or through an LLC, it boils down to your personal taxes, and depending on your personal tax circumstances will determine if there were any benefits or, what can be done to
Right.
shave off some of those taxes.
Right. So are there other, obviously investing through an LLC or an entity of some kind, or obviously the accelerated depreciation is something we're very familiar with, and something that can help people, reduce their taxable income, not necessarily all their income, but certain areas of it,
Right.
some more than others. Are there certain people that you see that have more advantage to this than others, or is it kind of an equal playing field?
No, that's a good question. It really depends, again, on the individual circumstances. So there are some people that can be classified as a real estate professional. That doesn't mean you're a real estate agent. It just means based on your circumstances, based on how many properties you have, how many hours you're putting in to manage those properties, you could potentially claim losses against the rest of your income. That is one area. Not a lot of people qualify, and a lot of people mistakenly claim that on their taxes and kind of get reamed by the IRS. But that is one area that can definitely help. The other couple of areas are at the back end, where, if you decide to offload the property, there is, Section 139. But for example, there's opportunity zones where people can invest in 1031 exchange. There you go. That's what I was thinking about. Where if you sell an investment property and purchase an equal or more expensive rental property or investment property,
Right.
you won't avoid taxes, but you kind of push them to the future. So that's
Right.
one way of kind of getting rid of the capital gains there.
Okay. Yeah. No, that will do it. Those are things that I think everyone needs to have in their toolbox. These are tax strategies that if you're a real estate investor, you must know about. It may not be for you. Like you said, everyone's circumstances are different, but you got to know what's out there. You got to know what you can do and what you can't do. More importantly, I think that great point about the real estate professional status, we've talked about that a few times on the show. And it's funny because the question comes up a lot. And I'm constantly, one of the first things, I talk to every single client I speak to is, defining what this real estate professional status is and making sure they know that they're only claiming that if they can actually prove that their main occupation is in real estate. Unfortunately, it's something that if they claim and it's not so, and they're ever to be audited, it's not going to be a good feeling when it comes out the other end.
Absolutely. Yeah, especially if someone has a full-time job, it's very difficult to meet the hour requirement. I know there's a bunch of ways, there's a bunch of things online, there's a bunch of Instagram posts, TikTok posts that kind of talk about, hey, do this. But again, I ultimately end up being the bad guy telling people, hey, technically you don't qualify, so you're not able to get these tax advantages. You don't ultimately lose those expenses or those losses, right? You get to carry over some of those passive losses to future years, and depending on your future tax circumstances, you could claim those expenses then or losses then.
Yeah. And there are there's certain times when it's going to be more advantageous to have those losses. In a future time, you may have a capital event, you may be selling a property, you may be able to use those losses.
Right. No, absolutely. Absolutely.
Oh, very cool. Well, tell me if there is something, any changes that are going on. I know there's been a lot of talk in the news recently about certain tax reforms or tax changes. Anything that you're aware of that's coming up that our listeners may need to be on the lookout for?
So there's a lot of stuff up in the air still, right?
Right.
Senate passed it, House hasn't passed it. So it's kind of like a couple of things that I'm personally hoping for, especially being in California, is the SALT limitations or the SALT cap, where individuals that own a personal home or even your state and local taxes that are paid through your wages, those can be deducted as part of your itemized deductions. As of today, all of that is capped at $10,000. Now, being on a coastal state, I mean, first of all, state taxes are super high, property taxes are pretty high. So that $10,000 cap doesn't really do much or doesn't really help much for people like us in California. So I was kind of reading about how they might be raising that limit to about $70,000 or $80,000. That if that happens, then that should help a lot of people, right? Not just California, but people all over the US, right? Because that automatically pushes you above the $10,000 limitation and could help you further itemize and thus reduce your taxes on the personal front.
And it used to be, there used to not, this is a relatively new law that there were these, the SALT state and local tax limitations, right?
Yeah, 2018, when the whole tax simplification thing happened, they doubled the standard deduction and then they put a cap on the state and local taxes, the SALT. So that was 2018. Before that, there was no cap at all. Whatever you paid, you can write it all off. And yeah, we're kind of hoping that comes back because it's affected a lot of people. We've seen a lot of tax, even though tax rates might have adjusted a little bit, but yeah, people ended up paying a lot more tax or lost a lot of deductions because of that.
Yeah, 100%. That will certainly help. What's interesting is it helps, kind of the middle class, it helps the lower class, a lot more because they're able to literally reduce their tax liability in a significant way. Now, you mentioned you're in California. Are you investing in California as well? Meaning, is that where your rental properties are?
We've tried, but California, just like any other, hot state, is kind of difficult to get into. So majority of our portfolio, actually like 99% of our portfolio, is in Nevada, Las Vegas. And that's just, again, saw a couple clients investing in there. Properties were cheaper than cars back then. This is like 2008, 2009. So yeah, took a gamble, picked up a townhome for about $70,000. There was a lot of foreclosures and short sales going on at that time. So again, me and my cousin each put in 50%, picked it up. Then 6 months, we were able to refi $20,000 more than what we bought it for, or basically took out $90,000. So, and then kind of used that to invest into something else. So since then, we've just been in the Las Vegas, Nevada area and just kind of focusing on the multifamily, trying to pick that area up.
That's great. Do you have someone local there that handles? You have property manager or whatever that's out there?
Yeah, we worked with a real estate agent for a while. It was actually his cousin that was short selling the townhome. So he kind of lucked out there. And then we definitely have a property management company out there. There's no way I'm going to be driving out to Vegas, even though I'd like to, but there's no way I would be driving out there like every week.
Sure. No, listen, there is a way to do it. Obviously, people all over the place invest long-term. In fact, my parents owned a bunch of rental properties in Las Vegas from Los Angeles where they were living. So they, they had obviously property managers that took care of that. But it's something that finding a place out of state where there's definitely cheaper rental properties and cheaper, the property tax is much, much less in a place like that. Right. So I can understand why you're not investing in your backyard in California.
Yeah. Just the overall cost of operations, cost of, getting things fixed, right? For example, it's like almost double the price in California versus Nevada. Obviously Nevada prices are going up, which is good, but yeah, just the cost of getting everything done out there is a lot cheaper, a lot easier to manage, I think, based from California, in my experience, at least.
Is this kind of rental thing you're doing? Obviously, it sounds like a side hustle, the tax, Sharma Tax, that's the main job. Do you ever see that switching in any way, or you feel like you're going to be doing taxes for the rest of your life?
I hope not, but I think that's like a eventual goal, right? Where tax laws are ever changing, right? It's fun, right? Because things are constantly changing. I'm not good at math, but I'm good at money, right? So that's what I kind of tell clients. But when it comes to real estate, it's never truly passive, right? You can't just sit there and just watch money like walk into your bank account. There's definitely work involved. And I think that's kind of fun, right? You're kind of building, it's kind of like, I don't know if you remember the game SimCity, right? Where you're kind of building a city, kind of putting things together. So that's how I kind of look at it. We're kind of building almost like a real estate empire, right? You're kind of putting pieces together. You also get to learn a lot too, right? You get to learn how to manage a property. And you also get to figure out what are your own strengths and weaknesses, right? Because I can call repair companies all day, get 100 bids and then pick one out. And by that time, someone's toilet has overflown 15 times already. So kind of understanding what you're good at, what you're not good at, and kind of outsourcing that part. So that's where property management, I think, even though you're paying for it, is super, super handy. And then just kind of find someone that you can work with and, leverage their skills to fill the void of my own lack of skills.
That's a smart way of looking at it. And I love the fact that you say, figuring out what you're good at, and you learn a lot along the way in real estate investing, in any business for that matter. But even with a side hustle, even with something you're just kind of doing, dabbling on the side, it still takes work. That's for sure true. There's a lot of people out there pushing passive income, right? Mailbox money, that kind of thing. That really only exists to a certain extent if you're either like investing in a REIT, which is not really real estate, or, maybe passively investing in a syndication or something like that, where sure, it's pretty passive, but still you need to do a little bit of work and, doing some due diligence and making sure that you have the right people you're investing alongside with. But other than that, it's pretty involved, I would say so.
No, it definitely is. It definitely is, especially when you're trying to get a loan or you're trying to refinance. Being self-employed, the banks ask for everything and anything. Luckily, we have an accounting firm, so everything's documented fairly well. I just can't even imagine people that, haven't done their books or don't have proper tax returns and the bank's asking for all these documents and then people are running around. We see that. We see clients kind of running around, and that's when we're like, hey, remember when we talked about doing your books a while ago? This is why. So, but yeah, no, absolutely. You did mention syndication. So we are seeing a lot of that in terms of clients building out syndications and other clients kind of, investing into that. One thing that I do recommend, kind of like how you touched upon, is just do your due diligence. Make sure that just because it sounds cool doesn't mean it's going to work out. That we've seen a lot of syndications kind of fizzle out just because people didn't do their due diligence, got into buying land and trying to build a property and things just didn't work out. And now you get to claim all these, or you may not be able to claim these losses on your taxes.
Yeah.
So, definitely would recommend do your homework, do the due diligence.
Absolutely. And that part of it is actually, it's not as easy as it sounds, because you may have people out there that are big on social media or things like that and are not necessarily the best operators. And even if you do have some good operators, you never know if you get bad property management company, and that could really kill a deal. I literally heard a story last week from someone, I'm not going to mention names here, but there was a well-known real estate syndicator that, bought a property, and this person who I was speaking with put in a passive investment, a significant amount of money, 7 figures, into this deal with the hopes that they would be getting, a portion of, they're doing cost segregation, they're going to get a portion of that depreciation back to them. They were going to use it to offset, some capital gains and things. Turns out after a year of the property, it went from a 95% occupancy down to a 70% occupancy.
Yikes.
Due to some major property management problems. And I guess they weren't managing the managers as they should have been. They have not given out even a single distribution over a year. And they also, I guess they were having problems with their tax people because the tax people didn't even send out K1s. So this guy's panicking. I need my K1s. I need these losses, or else I'm going to be paying, hundreds of thousands of dollars in taxes I was hoping to offset. And it's really a nightmare. And I think the point of that is you can never really be sure. There is risk involved. If someone tells you there is no risk in investing in real estate, I would run the other way, because there's always going to be a risk. You have to do your due diligence and, make sure to talk to other people, make sure that who have invested previously with these people, make sure everything they're saying is true.
Yeah. Just something as simple as just talking to your accountant, talking to your CPA. I understand that we don't provide investment advice and stuff like that, but just through our experience, I feel like we can add a little bit of value and just let people know, hey, that doesn't look right, or that doesn't seem right, or these are the tax consequences of your investment, or depending on what you're planning on doing, this is what you may want to look out for. So maybe just kind of talking to almost like an advisor, just to kind of get an idea of, should you be making this type of investment, or like you mentioned, right? What are the repercussions of doing so? What if you don't report that K1 because that company's taken forever to issue that K1? What are the implications of doing so as well? So, there was one client, for example, he sold a property. He wanted us to run the numbers to see how much tax he'd owe. And he's like, whoa, that's a lot of tax. I get started with a 1031 exchange. And I was like, whoa, way too late. You already sold the property. Not much that we can do now. But had we had this conversation 3 weeks before, he could have done something about it.
It's absolutely right. That's a very common mistake, unfortunately. And so you got to make sure that you just being in contact. I think that's a really important point. Be in contact with, if you have financial advisor, CPA, tax advisor, whoever that is, have those conversations earlier on. You never know if it's going to be too late. Some valuable stuff here, Sameer. I want to transition now to what we call the final four. These are 4 questions we ask all our guests. First one to you is, what is the worst job that you ever had?
Oh man, that's going to be tough. To be honest, I haven't really worked anywhere else.
It sounds like you've been doing
a company, but I guess the worst job here would be, maybe when I first started, just in the file room. We literally had a room full of files, like 16 file cabinets, and we didn't have any electronic, data management. So we would literally sift through files, pick documents, pick them out. And so that was probably the least favorable item that I've done here.
That's fair. Fair enough. I mean, yes, you did mention at the beginning of the show that you've been doing it since you're like 17 years old. So I can't imagine you had too many other things that, that's a fortunate place to be in. I think a lot of people have dabbled in a lot of different things, and just having something constant and consistent, that's a good place to be. Second question, what's a book you've read that's given you a paradigm shift?
I know everyone says this, but it definitely did really change how I looked at things. It was Rich Dad Poor Dad. I think that was probably one of the first books I actually read cover to cover without putting it down. It was just really insightful, from the way of looking at things a little differently, right? Where my parents are immigrants, right? They came from India, and their whole thing wasn't hustle, hustle, hustle. It was hustle to survive. So they only had one wavelength, one way of kind of looking at things.
Right.
But where it's like now, it's like, I remember my dad would say, hey, we're here to or his job was to build a platform, and my job was to kind of take flight from that platform. So I feel like we were kind of given that opportunity. But what the Rich Dad Poor Dad book kind of showed me was that, there are ways to take flight, right? There are ways that, I guess, hustling and kind of, doing that type of, every 9-to-5 job is totally fine, right? It works for a lot of people, but there are other avenues, there are other, paradigms that you can look at.
Right. That's awesome. And yes, we have had a lot of people on the show mention Rich Dad Poor Dad for a very good reason. And if you are one of those people listening to this who hasn't yet picked up the book, I highly recommend you do so, regardless of the one episode we did have with Omar Khan that said that it was a book that he read that he felt dumber after he read it. But that was him. He was in a unique scenario, but everyone else found it to be good. So yes, we'll put that in the show notes and check that out. Third question for you, Sameer. What is a skill or talent that you would like to learn?
This is kind of weird. I love basketball, and I wish I could dunk. So maybe the ability to jump higher or have more agility.
Oh, there you go. Okay. It can be done. Listen, people have done it. You just train. In fact, I feel like there's one other person that said on this show, once upon a time, something about being able to jump higher. And I usually remember everyone, but I feel like that may have been one of the earlier episodes.
Yeah, because I'm 6'2", so I'm like almost there, but not there enough.
Some training. I'm sure you can do it.
Yeah.
There you go. So fourth and final question, what does success mean to you?
Man, that's a kind of loaded question. But for me, again, looking at our background, right? Our parents immigrated from India, not just my parents, but like my entire family. Their whole goal was survival, and they've obviously met that goal, right? Now, I feel like as the next generation, our goal is to thrive. So when I think of success, it's not an individual thing for me. It's a family, it's a community. It's, it takes a village to, it's our village, right? And so it's not just our community, but overall. So whatever I feel like I learn, if I can pass that on to clients, or if I can pass that to other individuals, I feel like that to me would be worth it, right? That to me would be success. So for me, it's not really monetary. It's more of like, how do we grow our community? How do we help others? And how do we make sure we don't kind of go backwards to, struggle?
Love that. That's great. And I love the perspective that you give, because it is something that, a lot of people out there are in a similar boat, that they have had coming from, parents or immigrants themselves, and just trying to make it and being able to give that over to the next generation and give that over to, to make sure that you leave a legacy. So I appreciate that perspective, and appreciate you coming here on the show and spending some time with us today.
No, thank you so much, sir. I really appreciate you having me on here. And again, anything I can do for you. You've helped me so much. You introduced me to a couple people that helped out our clients with the cost segregation stuff. So anything I can do to help you, sir, let us know.
Thank you. And where can our listeners find you or reach out to you?
I am active on LinkedIn. So, Sameer Sharma, yay. There's not too many Sameer Sharma, so you should be really easy to find. Otherwise, our website, sharmatax.com. We have a contact us information there, or my email, sameer@sharmatax.com.
Very cool. Awesome. So thank you again. And I appreciate the time. And to our listeners, thank you for joining us all the way to the end. And remember, the best advice comes only when you ask. Real quick, I have one question for you. Did you like this episode? If you did, I want to ask you a huge favor. See, the biggest thing that helps this podcast grow and that will spread this message to the whole world is that if you leave a review, a rating, and subscribe to the podcast. What that does is it basically tells the platforms that this podcast is out on is that you like my stuff and I'm doing something right. So take a few seconds out of your day, hit that subscribe button, leave a rating or review. I would be extremely grateful. Also, I want to hear from you guys. So I want to hear some feedback. If you have any questions for future episodes, please find me on LinkedIn. Send me a DM, a connection request, Yona Weiss, and I'd love to hear from you.